Ladies and gentlemen, please rise, would you? As we, here at the Trader Nerds community, celebrate the amazing, enormous accomplishments of our own Notional Ed. 11 weeks ago, Ed and I started on a journey for his 12-week mentorship. And due to the fact that he was such an amazing student, he completed a week early, ahead of schedule, and is now a better trader than he was when he started 11 weeks ago. Ed was among many who applied for the program, and Ed was selected because I knew that he would be like to help others with more money. And because many of you nominated him, which no one else nominated anyone else. He had 3 or 4 people to nominate him. So without further ado, ladies and gentlemen, I present to you Notional Ed. Good morning, good afternoon. Ed, how do you feel? We can't hear you, Ed. One thing I didn't teach him is how to unmute his computer. Okay, here's Ed.
Yeah, but everyone knows my mouth gets going, so there's no doubt about that. I'm feeling good, Bobby. Feeling good about the graduation.
And he wore his Trader Nerd shirt today, which is very appropriate.
Yeah, baby.
Look at that. Doesn't that look good? All right, that's enough, Ed. Sit in. So let's talk a little bit about Ed. Now, we didn't know exactly how we were going to do this because I've never done really a mentorship. You know, there's always been a college kid or two that says, hey, will you help me? And, you know, we'll text or talk a little bit. And generally by week 1, they quit. I don't know if it's too hard. I don't know if they just can't commit to the time necessary to put in. But, you know, it was my hope that Ed and I would maybe meet once or twice a week. So then I was like, okay, we'll meet every day, Monday through Friday. And then I was like, okay, listen, this dude loves to talk. So I've got to put some parameters around Ed or I'll just, you know, it'll be never ending. So what I told Ed we were going to do is we were going to do 10 minutes a day. Telling Ed that he's going to do something in 10 minutes a day is like putting a Great Dane into an egg carton. They really don't fit that well. So oftentimes our 10 minutes would become an hour or more, but I enjoyed it, right? I really did enjoy the time that Ed and I put in. And I've said this several times, but I've gained as much from the mentorship as Ed gained, no doubt. But it's really, really good experience. But I thought it'd be great for us to just talk about it. I don't know if I can do any more of these, to be honest with you, because, you know, the time commitment, I don't know. It was a lot of time. It was enjoyable, but if I did do someone, it would probably only be like 1 per time, and it had to be someone that's really committed. Like I say, everybody other than Ed that I've ever tried to start, and again, it's been like college kids or friends or you know, people, and they all quit. They all quit, and Ed didn't quit. He was, you know, and so you know, shout out to Ed for quitting. I don't know why he didn't quit. I don't know why everyone else has quit. But Ed, maybe you can get us some, and if anyone's got any questions for Ed about the mentorship, or I just kind of want to get some takeaways from Ed and his experience and what he thought going in, and was he nervous? Was he scared? Ed, how was it for an experience for you, like, you know, going into that?
My dog.
Okay.
So going in, I was excited. Bobby, let me go let my dog out. I'm sorry.
Unbelievable. On his, oh God, and then we got to see his legs. Jeez. My dog yesterday, I got to tell you, my golden doodle went missing. And so I'm going up and down talking to the neighbors. Have you seen my golden doodle? And so I'm like, River, come here, River. And so River was hid in the bushes beside the road, and I said, "Oh God, he's got hit by a car." Fortunately, he did not. He was just scared to death. He was just scared. The cars were scaring him, and so we got his collar back on, his little correcting. Anyway, go ahead, Ed. I'm sorry.
Sorry, and the dog didn't even want to go out, so go figure.
Yeah, go ahead.
So I was very excited. I applied a little late. You opened up your application window, and I applied a little late. At first thinking I really didn't need to do this as much as other people, so I should step out of the way. And then I realized that's not a good reason. I want to do this and fast track my learning experience. So needless to say, I was extremely excited when you picked me. There was a little gap between being selected and starting. I had to get my account transferred over, and we just had a little gap. And I spent a lot of time learning as much as I possibly could, like about the Greeks and some other things, in anticipation of what I might learn. And frankly, I had no idea it was going to turn out like it did, as you've heard me say before. You know, the trading plan that we worked on, and we talked about this, I think the first day, that you were going to expect me to have a written trading plan and to begin to work on it. You started with it being a fluid document because you knew, as we learned, there would be modifications to it, and there were. And periodically through that 10, 11-week process, you would have me submit like an updated trading plan, which was good. And, you know, I have a little bit of a syllabus on, and I haven't sent this yet to you, Bobby, but it's basically an outline of everything we covered. And it's just made me a different person. You know, like today's market, we're down 2.5%. You know, I'm not thrilled with it at all, but I'm down just under 1% for the day in one of my accounts. And in the other one, I'm down 2/3 of about 0.6%. So I'm keeping, based on what I wanted to learn and what you taught me, I'm keeping my portfolio in line regarding the Greeks and the metrics that, you know, we've been talking about here week after week, month after month. And it helps me on days like today, where I am, like everyone, kind of still gritting my teeth a little bit, but then I have to reflect and say, okay, I'm as prepared as I could be. So, you know, it's just been a phenomenal experience, and just so enjoyable to have all these things presented to me by you that I had never run across. Most of the things we talked about, I had not run across or been exposed to in the past. We did a lot of trader psychology, where you were analyzing me, my actions, my inactions, my words, and then reflecting back on that, which was super helpful to me. I see a question here. What was my previous trading experience before the mentorship? So I'm 61. I've been following the markets kind of since like I was 20. And at first I didn't participate much. And then in my mid-20s, I started doing the Bobby thing, where I started dollar cost averaging, putting $100 a month into 9 different mutual funds. And I did that, I can't tell you for how long, but a long time. And then started accumulating more funds elsewhere through work and that, and started trading here and there. And there was some hit and miss. And I have had some successes in the past in certain sectors. Usually I seek out value sectors when they're out of favor and put money in those, and then it recovers. So I've had missed opportunities. Totally missed the crypto thing. Excuse me. Totally missed the initial internet boom in 1997, 8, 9. Mostly missed all that. Missed the crash that followed it. Some other things, I actually have a Series 7 broker license that I got in 1987, and did that along with the insurance business, where I would just do a lot of planning for people. And so I have decades of prior experience being exposed to the stock market, and I've done gold trading in the past and other things. I've done a lot of fixed income trading and business for clients. So I have a lot of experience. I had zero experience with what we do here. Again, as I've mentioned in the past, I started in another Discord room, one you have mentioned before, Bobby, and learned a lot about theta selling. Not quite as much as I would have liked to have learned about protecting a portfolio, but I didn't get scorched like so many people did because I would edge in and edge out real quickly. I wasn't really committed to the plan. So came to Trader Nerds. I guess it was probably in late February, maybe somewhere around then. Started listening to your videos. At first, it barely made any sense to me at all. And then being persistent with listening to the videos. And at first, it was like 2 to 4 a week. And if I found something that really spoke to me, I would listen to it more than once, which I recommend highly for everyone. If there's an episode that you find that speaks to you, save it and review it more than once. Those are like watching a good movie. You can watch it again and get much more out of it the second time than the first time often is the case. So that's it. I'll be quiet now unless anyone has any other questions. Or Bobby, I don't know where you want to take this, but I'll hand it back to you.
I think what was interesting with Ed, y'all, and y'all certainly can speak up, asking questions or type them in the chat. The thing with Ed is that he came in and you should have seen his charts, and he may still use these charts, right? But Ed would just have all of this stuff and all of these charts. Ed, I mean, it was really overwhelming, some of your charts.
Mm-hmm. I've been a big chartist since the early 90s. So self-taught, I'm not an expert, but I've been exposed to it for a long time, and I have compiled what I consider relevant things. And yeah, I was very focused on the charts. I was very focused on fundamental information, economic releases and such. And the trading kind of came third. So I'd look at charts, I'd watch the fundamentals, and then I'd finally make a decision to make a trade, which oftentimes was either early or late. I mean, those things didn't truly help me. And that's one of the things I found super intriguing about the whole theta selling. You know, we sell options. That's what we do. So selling that theta, selling what amounts to a net short position in options, because we have the put debit spread that's long and the naked put that's short, but combine the two, the net is a negative. You're selling theta. And I was intrigued by it. And what I've learned throughout our little test run where I traded for 58 days, I targeted a 12% return. And over the 58 days, I was just under the 12% return annualized. And when I liquidated, it was on September 6th, which was after we had fallen real hard and recovered a little, and my portfolio was like at a record, and I had a ton of theta, but I needed to move my account to Tasty. So if I just kind of let that portfolio play out, I probably would have milked a little more out of that. Again, even on a horrible day like today, where I'm not liking what I'm seeing, I am thinking we could still go lower, yada, yada, yada. I feel like I'm in more, I won't say more control of what's going on, but I'm more at peace with what's going on because I have the written trading plan. I can look at my Greeks. I can see what they're doing. I can model the portfolio, and it just gives me a better sense of understanding about what's going on. And it does give me a little more control on how I'm managing the portfolio. So again, you have given me not a technical way to look at the market, not a fundamental way of looking at the market, but a way of managing a portfolio. And I like it so much because almost, again, a day like today kind of breaks that, but it almost is irrelevant what the market does over a few weeks period of time, most of the time. And that's what I was looking for. I'm looking for a decent rate of return, not a great rate of return, and a modest amount of risk. And this looks like it gives me the shot at a good rate of return with a much decreased exposure to the market than would otherwise be the case if I had not been exposed to everything I've picked up here and in your mentorship.
I think one of the big things that Ed did differently at the end that he did at the beginning would be his actions in the market yesterday. Ed, tell him what you would have done yesterday about the Fed and all of that, and compared to what you were able to do yesterday. I just loved how he was so nonchalant about it being a Fed day, because that used to be the biggest thing for Ed. You know, if he heard of an announcement coming out, especially from the Fed, you know, he was all over that.
And I would go into paralysis. I mean, there's no way I would have put a trade on before the Fed announcement before. And I might have gotten very defensive, which is either a great thing or it's a bad thing, depending on what happens after that announcement or any announcement. So yeah, earlier in the week, I put on a little trade Monday in my smaller account, and then I put on an ES 112 in my big account on Tuesday, because I was very light on theta, not because I was defiant of, you know, what might happen on, but my metrics told me I needed more position, so I put more position on. And then I did another ES 112, which is not normal for me. Usually I like to put those on about once a week, once every 10 days, let those put debit spreads mature. But the market was falling so much, it was down like 3.5% more when I put on a second one for the week. And I'm kind of taking it today, like everyone is, but I've already looked at these positions, and in a week, like I'm under like $500 on one of them that I put on earlier in the week. And I just modeled it out 7 days, and I'll be down $78. So, you know, looking at the little trees and looking at the whole portfolio, the forest, it's a great thing. And it can kind of take me off the edge. Again, everyone's anxious on a day like today, unless you're short some futures and you're making money and it's a celebratory event. But if you're not hedged or you're not fully hedged, everyone's kind of taking a punch to the stomach today. And just knowing how to look at things and figure out where things will be in the future, whether they're worse or better or the same, being able to model all that it's invaluable to me. It's just, I wasn't in any way really able to do anything like that before. So this whole thing will serve me very well going forward. And again, I thank you so much for the time you put in. I mean, I'm guessing you probably put in 30 hours, 20, 30, a lot. I don't know what's going on behind the scenes, but we have met probably on average about an hour every time we meet, which has been almost 5 days a week. There've been a few times where we didn't. And again, a lot of customization. I think for a week or two, there was a period where we were really drilling down on some of my, I won't call them faults, but things that I was doing that hadn't really been analyzed. And I wasn't sure why I was doing them or that I was doing them. And you were able to do a real trader psychology thing on me and really touch some things that had meaning to me. And again, like you said earlier, a lot of this turned in, as the mentorship moved on, a lot of this turned into like a debate discussion between us. And you would influence me. Sometimes I would influence you. And of course, that made it even more fun and more enjoyable for me. And I think for you as well. So again, I just want to thank you. There's no way I can thank you properly, but I want to thank you for selecting me and doing everything you did to improve what I am as a trader and a market participant.
Well, one of the great things that, you know, Ed contributed especially was he was like, hey, Bobby, look at your theta guidelines. He said, you know, if you're ever at 0.5, you're always too high on every other metric. So that was some of the drill downing that we did. And because of Ed's comments and observations of that, that's what led me to lower my upper threshold for theta to 0.25% rather than 0.5%, and going back and analyzing our trades and our metrics. So, you know, I learned a lot as well. And remember, when we initially started this, whatever, 2.5 years ago, coming online, remember, I was at the point that I thought I was dying. Remember that? I had my toe amputated. I was eat up with the diabetes. We were trying to come up with a mechanical way so that Beth could continue this in the event of my untimely death, which I thought was coming soon. Since that time, old Bobby's been losing weight, going to the gym, personal trainer, doing everything to a point that we now, I don't think about it as much that, hey, I'm, knocking on death's door. It could happen tomorrow, but, we're actually making really, really good progress with our health, and we made good progress with our trading. So I started this basically to keep myself accountable, because one of the things that I have, and Ed has, and many of you have as well, is that we chase the newest shiny thing, right? So especially, we're all taking a little heat today with the down move in the market. So what'll happen is a lot of people will just throw up their hands. The strategy doesn't work. They'll pop out of the Discord room, and then they'll go find the next newest, shiniest trade. And that's what this does. It helps keeps me grounded, and it helps keep Ed grounded. Because Ed, you were the same way, right? I mean, you were a shiny object chaser.
Yeah, well, without knowing it, I was for sure. And whether it was a trade type or a new indicator on the charts, which I'm not a giant indicator changer. I've basically been using the same stuff, but I won't say I stopped looking. I just it over years. But yeah. So yeah.
Ed, let's go into a little bit. And Ed doesn't ever tell me, hey, this person said this or this person said that. And I know a lot of y'all chat with Ed, in Discord and everything. You guys have had conversations. He doesn't tell me who he's chatting with or who's talking or what they say, but he does tell me the general sentiments of people within our trading community. And those have been some really, really insightful discussions. And Ed's like, yeah, you need to do more analysis like you did the other day at the end, things of that nature. But Ed, kind of talk about some of those feelings in the community, in our community, and kind of what the mentorship did to help you with some of those feelings that you were also having.
Well, there's being exposed to the markets for a long time, you pick up little expressions. And one of those is, people are either fearful or greedy. Fear and greed is what rules the market. So I always kept a mindset where I wanted to be 51% afraid and 49% greedy. I never wanted to be greedier than I was afraid. And so that was a big emotional thing that I had baked in to my approach to the market. And because I've watched a lot of people blow up a lot of accounts over the decades. And I've had my own, punch right, punch left, and, some great successes and some relatively smaller failures. So fortunately, net, it's been a positive experience, but I always tried to balance that fear and greed thing. And I'm a relatively conservative person to begin with, as many of you have probably figured out when I'm preaching about buying power and everything else. And Bobby, it to be the case. So those were my emotions that I brought to the table, that and methodology that I had to recognize and prioritize, if you will. The emotions of the room seem to ebb and flow with the excitement of a new trade or a market rally or a market fall. Questions, like if someone brings something new to the Discord, there's like a tidal wave of questions that follow it. And that's part of that shiny new object thing. And there are people this week who are throwing up their hands and saying, I've had enough. I can't do it anymore. And, it's, again, the lesson you did, Bobby, I don't know, was it yesterday? I think it was yesterday, where you did the the premium capture and analyzing an individual tree, if you will, and that type of thing. So many people just, when the market tanks, everyone's anxiety just surges. And I try to preach keeping your buying power low so that when you have a debacle, I won't say like this one, because this one's even more extreme, but when you keep your buying power low and you see even after a day like today, your buying power may not be challenged and you could still put up. I I did a 112 in micros this morning in my IRA account. I mean, I did it when the market was down just under 2%. Now we're down 2.5. I did one. And Bobby, if we weren't having this session and we were going over my metrics, you'd probably say, hey, Ed, you probably should put on another one, and I may put on another one by the end of the day. I don't know. The other account, I kind of levered up earlier in the week. I'm just going to digest it. I had anxiety this morning about it. I looked at the trades and I analyzed them. I feel better. I'm only saying this to like let people know what I'm doing to make myself feel better. And it's feel better. I shouldn't really have any emotions, but when you're trading real money and the market's down 2.5%, and you may be over levered and you're down 3 or 4 or 6 or 8% or more, like you are feeling the sharp edge of portfolio margin or span margin. And Bobby, I've heard you say it probably 4 or 5 times over the months. Span margin, it's your favorite date until it turns bad, or I don't know what the exact expression, but it's true. If you're on the wrong side of leverage when the market moves against you, you're going to regret it. Now are you over levered when the market falls and it kills you? Are you under levered, under positioned, under thaded when the market takes off? That's also a frustrating situation. And fortunately, during my mentorship program, we started in mid-July. And if anyone wants to look at a chart, you'll see that's right when we took off like a rocket ship and went all the way to 4,300, ran right into the downtrend line, ran right into the 200-day moving average, started topping out, and then we plunged, 9.5%, 10% in maybe a week. And then we rallied 2 or 3%, and then I exited the portfolio. So the 11% up, the 10 or so percent down, 3% up, I ended up making almost 1% a month over that not quite 2-month period. So lagging the market hurt on the way up, lagging the market on the way down felt great. And then it was such a great experience because I've done campaigns before. And unfortunately, usually I build them up. And then Bobby, as you know, and as you pointed out to some people, I'd leave these positions on and leave them on and leave them on and milk. And I wouldn't be putting fresh positions on. So I'd find myself with a whole bunch of positions that were like up 80 to 90%, 100, 150%. And I'd just start taking them off at the first sign of a market pullback and then start rebuilding the campaign again. And I knew it was a good thing, but I never quantified it because I never tracked my trades. I didn't know about the Greeks and I couldn't track them. So I want to encourage everyone, back to your question of my finger on the pulse of the community. People are still in need of understanding what we're discussing here today. The need to go slow, the need to let your account build up over time and not be in a hurry to race up from 0 to 30% if you can go to 35% or 0 to 35%. You do not want to do it in 1 or 2 weeks because you're a genius if the market goes up a little or a lot. You're doing well if the market stays flat or maybe down a little. But if it does any kind of pullback, good luck to you. That's when you have your head handed to you. And unfortunately, that's what throws so many people out, right? Like their first campaign they're putting on, and they overlever, and then boom, it all blows up. And they're not prepared to handle it. So it's notional Ed preaching again, don't overlever yourself. And it used to be notional because that's all I knew before the Greeks. Like, don't take on too much notional account relative to your account value. That's all I could understand, is that I had like 80,000 in my IRA and I only wanted to control so much. Now I know Delta with that money, and think long-term, community. That's what I really want to like tell everyone. Like, of course we all want to make 5 or 6% this month. Of course we all do. But if you start out with a tiny little goal, with the understanding, and this is another expression I've picked up over time, the market has way more longevity than any of us do. The market is going to be around when we are all dust. So do yourself a favor, learn whatever strategy you were trying to learn, and learn it well. And that was one of the lessons you taught, Bobby, is try to find the name of this thing so I can mention it to everyone. We did the trading psychology, trading in the zone with Mark Douglas. That was great. And that may have been it. But again, back to what I was saying, do yourself a favor. Put yourself on training wheels for 2 or 3 or 4 months. Deliberately don't let your buying power go above 15 or 20%, and just watch the ebb and flow of the market. Watch your positions as the put debit spreads mature. Learn to model your positions. And if you keep your metrics low at the beginning, when you're kind of like, you kind of know what you're doing, or you're a complete, dodo bird, you don't know anything, like, don't be in a hurry. Think about what the future you is going to look back on. Like, pretend you're you looking back at you a year from now and 5 years from now. Is it critical that you earn a max return over the next 1, 2, or 3 months? Or is it more critical that you learn all the dynamics as much as you can during that period, which again, I'll call it the training wheel period, where you're doing the trades and you're doing the thing, you're just not running your metrics up. You're not throttling them up to the max. And if someone is sitting with 15% buying power at the beginning of the week, they might be at 30 or 35 now, but the market's down umpteen percent. So it just puts you in a position of being able to absorb the shock without blowing out your account or freaking out your brain. So that is, I can't really identify what the current pulse of the community is. It's a much bigger community now than when I started. When I started, it was mainly the live chat room and the 111 room with a little bit of discussion everywhere else. And it was easy to keep up with things. It was easy to do a lot of responses to a lot of people's questions. But it's grown. The rooms have grown. The content has exploded. So many other people like me have jumped into the realm, adding a lot of content and dimension. So there's no way I can keep up with everything that's going on in the room right now. So again, I'm blabbing a little.
But here's one of the things Ed had to come to the realization of, and I thought this was good. As much as he was helping and reaching out in the room, he finally realized, and it's part of his trading plan too, right? That, hey, Ed, I've got to take care of Ed first before I start taking care of everybody else.
Yeah. And it's so good that you point that out, Bobby. And it's not to be rude or mean, but, one of my first things, my routine is read these rules. It's 3 little pages. It's real quick and easy. Read the rules every morning. Why? Because if I don't read the rules every morning and we have a day like today, or we have a day like, I forgot what day was down big. Was it Tuesday? I think that we were down real big before the Fed announcement. If I'm not focused on what I'm doing, it's like an exercise program, or I don't obviously diet, but going on a diet. Like, anytime you're doing something to better yourself, it takes about a month to retrain the old brain to get in the habit of doing the right things. So I haven't been reading. The plan has not been formalized for a month. It's been in process for weeks. I mean, like, really since the beginning. But that's number 2. Read the plan is number 1. And number 2 is help myself before I help others. This includes reviewing my account, trade execution, trade accounting, and trading education. So, because I found myself, I mean, I am addicted to the markets. You say that we're all addicts. Yeah, I'm addicted. I'm also a trader nerd addict. And everyone I interact with can kind of tell I'm kind of a nutcase when it comes to immersing myself in the community. I love the trader nerd community. Before this, I was sitting in my office here in isolation with nobody to run anything by, just doing my own thing, kind of repeating the same old thing and having decent results sometime and not great results others. And, the community just means a lot to me. So I'm thanking you, Bobby. I'm thanking the community. And yeah, I'll hand it back.
Ed, you made so much to the community too. And, it's really good. You've been a valuable asset to the entire community. So, Ed, we talk about and here's one of the things, he's been in the market, y'all, for years and years and years, but he never had, and this is the one thing I said that we're going to do at the end of this 12 weeks. At the end of this 12 weeks, you are going to have a written document with rules and permissions, and with much more rules than permissions, because permissions are the ifs and buts and candy and nuts. We'll have Christmas all year long, right? So I didn't want Ed to be able to squeeze out of things. I wanted him to have rules, because one of the things that we noticed with Ed early on, and it's the problem that most of us have. You've seen me with spreadsheets, right? We'll start with 2 sheets, and by the time we finish our spreadsheet, we've got 26 worksheets in the spreadsheet. Y'all know how I am. So one of the things that Ed would do, though, was he would try to complicate the simple. Ed, talk to us about that. That was one of your big things, Ed. You would complicate what was already simple.
Yeah, and part of it is probably because I'm analytical, and part of it is probably because everyone does it, and I do see a lot of people doing it. And what it is taking the 1-1-1 or the 1-1-2, for example, and tweaking and modifying and stretching and twisting and da da da. And I'm not saying that there's not some grounds for that. If you're doing a stretched 1-1-1 or Tom King's 1-1-2 stretched for no credit, that's just a modification of the existing trade. And it's not really chasing a shiny object. It's just one of the tools with that trade construction that you do. And then there's almost an endless variety of ways that people have come up with to trade the 1-1-1 and the 1-1-2. And I'm not faulting any of those. Everyone wants to make that shiny little trade even shinier, so they're polishing on it all the time. They're calendarized, where the put debit spreads one expiration, the naked puts another. There are different configurations of how many put debit spreads and naked puts going on. And again, I'm not saying all this is without merit. We should all, just like the trading plan, we need to all figure out what we're doing, what we're comfortable with, what we want to do, write it down and follow that. So if someone comes up with a 20-20-47 1-1-1 or one, knock yourself out if that's what works for you. Just don't keep changing it every 6 hours or every 2 days. Stick with one thing. And that was the other thing that I want to, it was a good thing. So let me find that real quick. And I want to mention it. It was a video that you told me to watch early on.
While you're looking for that, Ed, yeah, we did a lot of things in the mentorship. Like, first off, and y'all know I do this in my Alabama classes as well, right? If anybody's been a student of me in my Alabama classes, the first thing that we do is you got to figure out what your theme song is, right? I wanted Ed to have his theme song. I wanted him to, when he approached the markets, that there is a song in his head that gets him pumped up, to attack the market. So we did all kinds of things, videos. He had to watch movies, right? He had to watch Matthew McConaughey with his shirt off in the movie. I mean, he had all these different movies he had to watch too. So go ahead. Did you talk about the video?
I left my shirt on. Matthew took his shirt off. Yeah, this is the optiongenius.com, optiongenius.com, podcast number 26. And the gist of this was pick 1 or 2 trades and master those. Don't overcomplicate. Don't keep switching. Just find 1 or 2 trades and really, really master those before you start looking at things. And I'm doing the same thing right now. So I was doing the 1-1-1, and after analyzing and I was a true believer in the 1-1-1. It brings in the same credit as a 1-1-2. And it uses less buying power. So that leaves me more buying power to roll and defend a trade if I need to, yada, yada. And I believe that to my core. And as we wrap things up and you're like, all right, you need to finalize this trading plan. One of the things I did, and a couple of you, I had some pretty extensive discussions with you, a couple of you out in the trader nerd community. And that combined with my own analysis led me to believe I'm now a believer in the 1-1-2. So, I love the 1-1-2, and that's what I'm going to stick with. So am I chasing a shiny object? No, it's all under the 1-1X campaign. And once I get this down, and again, we did almost 2 months in the mentorship, I plan on running the IRA pure, no experimental trades, no nothing. It's going to be this trading plan in its purity. And I'm going to keep running it because, again, this was the first time I've tracked metrics. It's super enlightening to track your own metrics and watch what happens to your portfolio over time. And then, Bobby, to take that information and watch what you're doing and comparing and learning. It's not that hard to learn. You just kind of have to keep exposing yourself to it. So, those were good things. I don't know. I'm sorry, I'm getting sidetracked. Go ahead.
Yeah, and we talk a lot about, and what we're pretty much exclusively trading in our group now is 111 trade and 112s. But so let's say that you're watching this video today and you go, that's not my thing. I don't want to do the 111, 112. That's fine, because the metrics that we use can be applied to basically any short premium strategy, right? So if you are, butterflies, or your strangles, straddles, selling puts, or iron condors, all of these metrics that we use, it doesn't matter what kind of trade you use, we're just using these metrics, y'all. And, we found out that, hey, it's kind of a better little thing than just selling puts. All we are in a 111 community is our put sellers, y'all. That's what we are. We're put sellers. And we're adding a little bit of insurance to the downside. That's all. It's nothing complicated. So if you're sitting there and you're a strangle seller or iron condor seller, it doesn't matter. Just doesn't matter. Dwayne said, Ed, is this the podcast you mentioned? Podcast episode 26, the ultimate options trading strategy. Yes, that is it, Dwayne. And a matter of fact, it should be in our resources tab in our Discord room. I think I've got a link to it there. It's so important. Matter of fact, I actually got the transcript. I think there was something, I got the transcript of the entire podcast. It was that important. And it may, if you look at the trading plan, like my 75 page that has everything in it that's in the resources thing, I think I've got the printout of the transcript of that entire podcast. I've got it somewhere for sure. It may be in that 75 pager. It's really good though, because that's what we do, y'all. And y'all, we're going to have a couple of people, probably several, that are going to go today and say, screw this, I'm out. I'm not taking this pain. And all I'd ask you to do is just compare it to this. Okay, if you were not trading this strategy, what would you be doing? And I always tell you what I would be doing. I would be 100% the SP 500. Long-term, baby, that's me. And I go, okay, how am I doing in comparison to the S&P 500? Now, that makes Tom Sosnoff a little upset. He doesn't understand having a benchmark. Karen had a benchmark. Karen wanted to be doing better than the S&P 500. That's pretty much my benchmark. I want to outperform the S&P 500. I am currently outperforming the S&P 500, even though it's down today. So does it bother me that I'm down today? No. Guess why? I'm doing better than the S&P 500. To me, that is the benchmark that I go against. I never want to lose money. Never. But I always want to outperform the S&P, at least be even with the S&P 500. If you can't outperform the S&P 500, then you should be doing the S&P 500.
And I would agree with that in general, Bobby. And I will tell you, although I agree with you, it's not my current objective. One of my objectives is to set a specific rate to generate off of rate of return off of this money. And I often did this in my past trading life. If the market was up 25% and I was up 15% for the year, I'm like, okay, I did it. I wasn't fully exposed to the market. I had a lot of money in fixed income. I'm doing trading on the side. I expected to lag the market. But then when the market's down 15%, some years I was up 5 or 6%. So I want to be positive all the time and not be negative is more my goal. I am positive year to date. I've been treading lightly a lot, but I'm up a few percent. I couldn't tell you exactly right now, but 3 or 4% for the year. Laugh, people, if you want to, but I'm not blowing out my account. And my goal is to earn a fair rate of return with a modest. I am using the S&P derivative products, SPX, ES, XSP, but not much, and then the micros, SPY, if that's your thing, but you don't get the 1256 tax preferential treatment because of the dynamic that they are, because it's 500 large companies, because over the long haul, those companies will continue generating higher earnings, propelling stock prices higher. It's got that built-in expectancy to it. And then the negative skew of options, where you sell a 400 point away option, put option, and you look 400 points away on the call side and you get half the money. So it's clearly better to sell puts as a strategy in general. Blah, 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 all that put together. So I am not trying to beat the market. If I wanted to beat the market, and I don't want to dash everyone's thoughts and feelings, and sure, it's a lot of fun to engage the market and then beat it. But if you look at the S&P 500 and you look at how many mutual funds and professional money managers over a long period of time, there's just a couple of handfuls of people that have solidly beat the S&P 500 over the long haul. So again, your trading plan should dictate what your goal is. Is it to match the S&P with less money exposed to the market? Is it to beat the S&P with a full allocation? Is it to under trend deliberately, kind of like what I'm doing? I expect to underperform in good and bad times. I mean, I'm going to outperform in bad times and underperform in good times, and that's okay. I don't want the extra volatility. I'd rather a steadier return. That's my deal. It doesn't have to be anyone else's deal. It's my deal. So again, the trading, build whatever you want in your trading plan. You got to think about these things. Here's something I've realized: the pulse of the community. I'm not sure how many people are tracking a certain rate. I don't know how many people are saying, I want to make X per year, and then divide that by 12 and make X per month. I think a lot of people are just trading, thinking, I want to make as much money as I can. I just want to make money. And you touched a little bit about premium capture. It's yesterday's episode, right? Yeah.
Yes.
So you touched on it, and we've touched on it in the class. And it's one of the things going into the mentorship that I'd been exposed to elsewhere in that prior learning experience, but didn't have the best grasp of it. I'm aware of Tastyworks metrics, where they average a 25% premium capture rate, and certain things you target 50%, but you average 25. And that's one of the things that intrigued me so much about this trade is your premium capture rate. It was up in the back test at 65%. I was at 80% for my 58 days, with the market going up 11, down 10, and up 3, and me cashing out at an all-time high in the account. My premium capture rate was 80 point something. I can't remember what it was. So that's an unbelievable premium capture rate. So I want to build a return based on that premium capture rate. And that's all I want. I'm not trying to, be the next market guru. I just want to do my own thing and do it as safely as I possibly can. So the community really should do itself a favor. Whoever's listening to this, if you're not targeting a premium capture rate and looking at it and deciding what your trade should produce for you, that is a big piece of the pie. Don't just go in there saying, I'm going to put on as many as I can according to the metrics or not according to the metrics, and hope. And then somehow look back at the end of the year and maybe try to figure out exactly what you did. Keep track of it as you go. Target a return. See how you're doing. Again, that's what I'm doing in this IRA account. I'm going to keep trading this thing. It's not the laminated copy. I'm still waiting on my daughter. But I am not deviating from this for months. I want to run a month's worth of additional testing for my own benefit and watch my own metrics and make my own adjustments over time. And the other account, which is a larger account, is the account that if I have an experimental trade, extending the DTE or trying a calendarized trade, or maybe I'm adding a long put underneath a 112 as a hedge, or whatever experimentation I want to do, I'm permission to do it in the other account in a very small way. I'm not going to mess with this account. So that's also a way of recognizing the shiny object syndrome. I'm permissioning myself to do a little shiny object syndrome in the other account while I'm pure in the, we could call it the training wheels account, where the training wheels are coming off. I know what I'm doing in the account. I know how to build up the portfolio. I know how to manage it, and I know how to maintain it. Now I just want to hone my skills more and become better at it. Again, like I'm starting a diet or an exercise program. I want to keep pounding the right things into my routine. And that other account, I'm using this account as a prototype for that account. The good things that I'm learning here, I'm bringing there. So, and I'm doing that modestly and slowly, so I'm taking a hit today. It's not fun, but it's not the end of my world either. So that's pretty good peace of mind. I mean, really, in the past, a week like we've had this week, and a period of time like we've had since that 4,300 top, I don't know when it was, a month and a half ago. I'm not looking at a chart. We're down 20% probably from then, or approaching it. I'd have to do the math, but you know what I'm saying? That would have been devastating. I would have been bummed all the time and everything else. And that's another thing. A lot of my prior to this, my happiness was, did I make money today? I'm happy. Did I lose money today? I'm not happy. Did I lose money 3 days in a row? I'm grouchy for 3 days in a row. That's a horrible way to go through life. So this has freed me from that. And again, if we're about to crash to 3,600, and we're almost there now, crazy as it looks, and then crash, and we end up at 3,000 next week, I might be bloody, but I'll still be standing, and I'll be better off than I would have been doing something else besides what I'm doing now. So I think it's a great thing.
Yeah. So Ed's got a written plan. He's got not only a written plan that has an objective. It's got his portfolio management techniques. It has his trade management techniques, which involves trade entry, trade management, trade exit, and he's got his tactics in there. Yeah, would you mind just going through the things that are in green on your thing? I think it'd be interesting just to give just kind of list those off, what the major green points are.
Yeah, they're kind of the headings.
Yeah.
I have objectives where I list some objectives. That's where I'm targeting a certain return, that type of thing. The foundation is a one-liner. I am a net short seller of theta. That's the foundation of my trading plan. There's the optimal and nominal goals, which nominal means like normally now, which is a 10% annual return. As soon as I achieve that, I'm going to ratchet it up to 15% and run 15% for a while and see how that goes. And again, I don't mind having a long, slow runway to more success down the road. I'd rather be healthy financially with my portfolio 1, 3, 6, 9 months, 2 years from now than make a whole bunch of money in the next 3 months and then lose it all the next 2 months after that. It's just not what I'm doing. So I have targeted returns there. I've permissioned myself on what I can trade in the account. And in this account, I'm only permissioning myself to trade the micros and ES. I'm only permissioning myself to trade a 1-1X, which can be a 1-1-1, a 1-1-2, a stretched 1-1-1, or the big ass 1-1-2, as TK uses. No straddles, no strangles, no covered calls, no nothing. And now, and then there's a routine category. They're my buying power metrics and utilization numbers. I go a little bit into delta and theta and what they mean to the campaign. I go into risk management, and risk management means how am I going to defend a trade when it goes against me? And I have some options there, and I have some permissions there. And then I have trading strategies to be utilized, which are things like the DTE range, again, the type of trade that I'm allowed to do, exiting strategy, Bobby, that was one thing you identified. I had no exit strategy at all. You know, my exit strategy before you made me pin it down was if I hit 70%, I'll put a trailing stop on it, or I can take it off anytime I want to. And that was fine. It worked well. It did allow me to build up positions. But again, for those of you who are listening and still debating, because even in my own mind, there's still some debate. If you hit that 70 or 75% and your metrics say you can still hold it, if that's in your plan, hold it. But understand that there's an opportunity cost, because when you hit 70 or 75 or 80, whatever your percent is, if you immediately take that thing off and immediately put a new one on, you're exposing yourself to potentially making another 70 or 75%, while that first trade goes from maybe 75 to 90 or something, you know, or maybe the market pulls back and your whole 70% evaporates into a loss that's going to take you a month or a month and a half until your thing matures or until you're forced to deal with it. So there's opportunity cost to not taking it off quickly and putting on another. And I won't go into any more trading strategies, but I do have other things built in there that I've written down. And again, if you have a day like today and you're looking at something, I need to adjust because something looks horrible. It does not hurt to have it written down what you're supposed to do, because your brain's a little, you know, unless you're a real pro and you have, like, you know, ice flowing through your veins, you might have a little excitedness running through. And this written trading plans are a great way to address that. I have best practices, which is kind of some overall rules for the portfolio. And then I have observations. And observations are things like when you're building out a campaign at the beginning, go slower at the beginning to let some of your initial put debit spreads mature before you pick up the pace of putting additional positions on and on and on. And I'm not saying go creepy slow, but if you're new to a campaign, the slower you go, the better. I'm just going to tell you, you might not make as much money or you might make the same money. But going slow is great. That's one of the observations. Oh, here's another one. I can adjust the plan at any time, but I can't deviate from the plan until I adjust the plan in writing. So if I see someone shiny object flashing and they want to do this or they want to do that, I can't just click a button and do it. I have to think about it, and I have to go in, I have to pull up my trading plan, I have to physically change it, hit the save button, and then I can do it. So if I really want to do something in 5 minutes, I can go add it to my trading plan. But the point is, I don't want to modify the trading plan. I want this thing, this could be a brick wall forever. I may never change this trading plan. So, and again, if you're seeing my little handwritten thing, oh, he's already modified it. Well, this was the prior to the final draft. So the final draft is with my daughter waiting to get laminated right now. So,
you know, one of the things
that's the plan, Bobby. And look, just one more thing real quick. Like, there is zero chance that I could have done this on my own without some type of assistance from someone. So massive kudos to you for understanding what a trading plan is, using one yourself, and teaching others the relevance of a trading plan. And I'll tell you that there are many people in the community who've been pinging me, oh, tell me about your trading plan. I'm like, just look at what you're doing and the routine you're doing and start writing it down like you're trying to explain it to everyone. And write that down as concisely as you can. And pretend you want to do a presentation to your spouse or your best friend or your neighbor, and they don't know anything. You know, you don't have to explain what a put and a call is. Don't go that far in your own trading plan. But it should be understandable to someone if they have any knowledge of what we are doing here. And again, kudos to you for that. I never had a trading plan, and it's just mind-boggling what it, and again, people will laugh, but I'm not a spreadsheet guy. Sorry, I've used them in the past, but I'm not good at them. Bobby, you'll attest to the fact that I was a spreadsheet for dummies kind of guy. That's how I titled myself, Mr. Spreadsheet for Dummies. And so I was skeptical, and I was skeptical for the first few weeks. And every now and then I'd hit a wrong button and something would mess up, and I'm like, screw it, I'm not going to do it anymore. And we'd have our session. I'm like, Bobby, this is messed up. You get on board, and you would just straightened me out. I'm like, and now I'm feeling good about the spreadsheet. I'm capable of, I'm not manipulating it, but I'm capable of using it. And if I make a mistake, I can see where I can fix it. And then I always have my trader nerd community and you, Bobby, to go to if I have an issue that I can't handle myself. But tracking your trades in a spreadsheet and learning what your metrics are, not yours, Bobby, each of our own, based on whatever we're doing. I mean, it is massively invaluable. And it is kind of married to this trading plan. You could probably track your trades in a spreadsheet and do a lot of analysis, but you're going to find yourself waffling all over. I mean, like, we're all human beings. We're going to waffle on what we do. And we need to waffle as little as possible. And when we waffle, it should be thought about and then written down and then done, not just go do it.
And here's the cool thing. Ed and I talked about, I can imagine a lot of people who will watch this video on YouTube will say, oh my gosh, they'll be messaging Ed, can I get a copy of your trading plan? And here's the thing. It wouldn't mean anything to you. It wouldn't mean a hill of beans to you, because Ed has put the blood, sweat, and tears into his plan. So you looking at someone else's plan would mean absolutely nothing to you. You got to go through the painful process of, what do I want to do if trade goes against me? What do I want to do? How is trade entry? What is trade exit? You got to go through those types of decisions. And it's hard. It's hard to face yourself when you're developing that plan.
It really is hard. It's very hard. And because a lot of us are doing things that we either don't know that we're doing, or we know we're doing, and then we're not really sure why. We're just doing it because it's the way we've done it for 6 months or 5 years or 50 years, however long we've been in the market and engaged. So there's not a lot of rhyme or reason. And again, when you have to write down what your 1-1x strategy is from start to finish, you're not going to sit down and do it in an hour or two. You're going to sit down and start for an hour and then keep working on it day after day after day until you've got a plan down that works for you, that's all encompassing. From a blank slate, all the money's in cash, let me move it into whatever I'm doing, to how am I going to exit those trades. And the fact that, again, I used to let campaigns run dry and I'd have to start over again. I don't want to do that. I don't like starting a campaign. There's 2 risky times in a campaign, in my opinion. One, when you're building it out and your put debit spreads have no strength. They're infants. I use that term. They're babies. They were just born today, or they were just born a week ago. They have no life to them yet. You have to learn all this. And then the second most dangerous point, in my opinion, is when you're throttling at the upper percentages of buying power in Greeks, and then the market doesn't cooperate with you and you get caught in an over-levered drawdown. And until you have experienced these things more than once, because this is like my 5th or 6th campaign, until you experience the strength of a mature put debit spread, until you experience having on too many positions too early and the market pulls against you, until you experience the joy of hitting the return that you think you want to return and realizing, wow, I'm hitting the return I want to return, and this isn't that hard or stressful. It takes time for all these things. So that helps me, like I don't want to go too fast at the beginning. I don't want to deplete my campaign too much at any point in time. Again, these are all things. Some of it I saw with your help. Some of it I saw with my own help. I don't know. But again, I can share my trading plan, but it's kind of worthless because, you've heard what my goals are here today. My goals are probably not the goals of most people. Most people are probably trying to grow their account as quickly as they can and as much as they possibly can. And I mean, kudos, I'm not faulting that in the least. I've been there, I've done that. But, the tortoise and the hare, the tortoise is going to win this race. The hare is going to get his hair fried. So go slow, respect yourself, respect your bank account, respect your ability to learn and assimilate all the little nuances of whatever trade you're doing, whether it's this one or a strangle or whatever else. And that's where you should learn one trade, learn it, master it. You may never want another trade. Or you may say, well, okay, I got that one down. Let me go master this trade next because maybe it's going to be a good add-on to what I'm doing. We're all individuals. We all have to figure out what it is that we want to do that makes us happy. So that's part of forming your own trading plan. And again, these aren't things that you're going to sit down and do in an hour. It's going to take time. Invest the time in yourself. You're already investing the time. Most people here are already massively engaged in the markets, or trying to be. Just spend some time doing the right thing. Don't read every post in Trader Nerd Community. Spend a little more time, read posts. They're very informative. And there are some brilliant people out there. A lot of my fellow moderators are super brains. I mean, it's to look at the people you've assembled in here, Bobby, it's mind-boggling. I mean, like a lot of these personalities I saw on Facebook, where I saw you initially and I saw them, and like here they are, and I'm a moderator with these people. I mean, like they're kind of like internet financial superstar people. You and the crew, like these are all names that a year ago I would have had no idea I would be interacting with you people, or have the ability to click a button and go ask someone these people questions. And again, some of your community, some of these people, I know they're trading big. They are successful. They're successful year after year. They've got their little recipe down, and some of them share, and some of them are just silent little mice. And it's okay both ways. People can do whatever they want to do. There is a ton of information that you can learn. Each individual one of you can learn in the community. Again, think, I've got to go slow. I can't spend 8 hours reading posts and listening to a few videos and I'm going to know everything tomorrow. No, you're going to have to read and watch and read and watch and read and watch. If you don't know this thing, it's going to take time to immerse yourself in it. And again, anyone who's been trading or investing for any length of time, you kind of know there's almost an infinite number of things that you're going to run into and be exposed to. So invest the time in yourself. Be patient with what you want to earn and grow into it. Don't be in a race. Be the tortoise. Don't be the hare.
Well, Ed, thank you for your time so very much. It's been a great experience for me, and I know everybody appreciates your time today. So, Ed, if you look in your messages, I have sent you, I'm going to check. Everybody see that? I have sent you your certificate of completion, Ed,
Sweet.
signed by Sweet Bobby himself. So you have officially graduated, and we commend you on your graduation. This has just been a wonderful, wonderful thing, Ed. So thank you so much.
Thank you, Bobby. I really appreciate. I cannot thank you enough. Again, I love the Trader Nerd community. I've gotten so much from so many people. I've given a lot and gotten more back. So there's a lot out there, and enjoy it. And again, thank you and everyone. I really can't thank everyone enough.
All right, guys. Awesome session. We will see y'all Monday.